So today I want to show you some specific reversal candlestick patterns that when you see them, you know that a reversal is about to occur. And these are very serious, yet they are very simple to identify. So first of all, I need to tell you the time frame that works best for identifying candlestick patterns, and that is the 15 minutes time frame. As you can see, I am using 15 minutes time frame. You have enough time for 15-minute candles to form a pattern. So guys, here are the 6 candlestick patterns that I want to show you how to identify them on your chart. These candlesticks are very important at specific points in your chart. So it's not that when you just simply see an engulfing candle, then it means price is going to reverse there. No, you will look out for these 6 types of candlesticks patterns at specific points that you think price should reverse, and I will show you that as well. So please remain with me. Okay, so let's start with the engulfing candles. From the chart here, I'm going to enlarge it for you so you will see everything. This green is an example of an engulfing candle. Why? It is engulfing this red candle. Let me enlarge it the more. So when you have a candle that is engulfing the previous candle completely, it is known as an engulfing candle. So this is one important sign of a reversal in the market. Now, I told you, it's not just every way that you see any candlestick pattern and then you simply say it is a reversal happening. It doesn't work like that. Okay, I will come and show you the points where you need to be checking for reversals. So stick along in the video, you will learn a lot. So here, this is another example. So let me just draw a box around here. This is another example. Okay, so this green that you are seeing is the previous candle. So it opened lower here and closed above. However, as soon as it closed, the next time frame began forming the next candlestick. And then this one opened here and then pushed down until it engulfs the whole body. Now we are interested in the body of the previous candle being engulfed completely, being covered by the next candle. That is what is referred to as an engulfing candle. So it's not about the wick. You can see the wick of that, this one, the previous one. Let me delete it for you to see what I'm doing. So the wick of the previous one is still high above this one, but yet this red is an engulfing candle. Now, because the previous one is bullish and the next one is bearish, it means this one that is engulfing is known as a bearish engulfing candle, whereas this previous one is bearish and then the next one that engulfs it is a bullish candle. So this is a bullish engulfing candle. Okay, so we have the bullish engulfing candle engulfing this previous one, and then we have this other one being engulfed by this red one. So this red is known as a bearish engulfing candle. We have the next one in our list. We have the evening star. Now I will show you an evening star from the graph. You know, these things you need to learn them on the chart so that when you see it in reality, you can know it. Most books will just snap the pictures to show you, or some may just draw it for you with pencils. You need to see these things in reality. That's why I'm bringing you on the chart and showing you these things. Now, for an evening star, we are talking about this. An evening star has 3 candles to define what it is. Okay, so to define an evening star, you need 3 candles, unlike the engulfing candles that require 2 candlesticks For an evening star, you need 3. And the first one will be a bullish candle coming up. Then, as buyers push up, their momentum went off. It became reduced. So the next candlestick will be a doji candlestick. Let me enlarge this candlestick pattern for you to understand. So this plus sign that you are seeing is what is referred to as a doji candle. So when you have a bullish, which means bulls were coming up pushing the price, but instead of going further, you now have indecision in the market. So a doji is a sign of indecision in the market. They don't know where the price will go. No one knows where the price is going next. But after another 15 minutes, there is a decision that was made, which means more sellers came into the market. And from where this candlestick closed, the doji candlestick closed, the next one started pushing down without even making any move to go up again. It started pushing down to completely engulf even this previous candlestick. This pattern is a very strong reversal pattern. It is known as an evening star. Evening in the sense that it was initially rising, going up, but later on, it is now back, going down. Okay, so it is an evening star. I love this particular one, especially at a point where I am expecting a strong reversal. And if I see this, I enter with one mind. I will tell you the points at which you will look for these patterns. It's not that you just see an evening star anyway, then you just say there's a reversal pattern going to happen. So when you see an evening star, it means market is going to start pushing down. So most times your stop loss will just be few pips above this point. Okay. And then you can see what happened. The market started pushing down because of this evening star. Now, one thing, when these things are being formed, don't just enter the market when a pattern has not completely closed. Okay. So for this, if you are in the market and this candle has not closed, don't enter, because sometimes you may see it like this. Even if it's remaining 1 minute, market could push it up again like this and it changes the pattern. So wait for it to close. If it closes like this, you enter at the close of this candlestick. Now the next one that I'm going to show you is a morning star. So this is an example of a morning star. Okay, this one that you are seeing here is an example of a morning star. Why? Because you will have a red candle bearish coming down, and then there's a loss of momentum in the sell. So sellers will lose momentum and this candle will close. As soon as it closes, there is indecision in the market. They tried pushing it down, but buyers came in and pushed it up. Sellers pushed it down again, and the candlestick closed just a little above where it opened. Okay, so this is a doji candle as well. It must not be completely plus like the way you saw the previous one that I showed you. Okay, so this is a doji candle, and as soon as there's opening of the next candlestick, it starts forming. You can see there was a talk of war because there was indecision. So the sellers tried pushing it, it could not go beyond the previous point, and then buyers came in and pushed it above this point. Okay, so this is an example of a morning star. Morning in the sense that there was evening coming, which means sellers were coming, pushing it downward. Evening, downward, going down. And then there was indecision. And then early in the morning, it started rising again. And one thing again with this thing is that the longer the body of the candle that goes above the half of this other bearish candle, the stronger the signal. Okay, so if this green had covered just above 50% of this previous one, then it will be a very strong signal. Okay, but even without that, this is a sign of a reversal in the market. Is another strong reversal pattern. And in this time, this time around, it means there's a reversal in the market. So instead of going bearish, the market has reversed to begin to climb up, to begin to go bullish. So it means there is an uptrend coming up. Okay? Yes. Understand what I said. There is an uptrend coming up. That you just see this does not mean that price cannot pass below this point. It can pass. Okay? But somewhere around that place, a reversal is about to happen. That's why it is good for you that you combine these reversal patterns with specific other factors on the chart. So you could combine them with resistance points, or you could combine them with some indicators that you use. Like here, I know that there's a reversal. Okay. Why? Because you have this morning star and then another reversal pattern. Can't you see an engulfing candlestick happening around here? This is an engulfing candle, engulfing this previous candlestick. So when you see two reversal patterns, so one a morning star and then an engulfing candlestick happening around here, then you will know that there is a reversal happening around here. It's something that is going to be very strong. Okay. And you could see, even from the market, you could see what happened afterward. The market kept climbing up because of the reversal pattern here. Now I want to show you a hammer plus an engulfing candle. Okay, so when you see a hammer and then an engulfing candle, it is also a strong sign of a reversal. Now pay attention to the type of hammer that I'm going to show you. These two candles, we have a hammer here that is inverted, then you have an engulfing candle after the hammer that completely engulfs the body of the hammer. So these two, when they occur together, that is a clear sign of a reversal. Now this is another form of it as well. You can see from this place too. Once you have a hammer, this is the head of the hammer and this is the tail, and then you have a clear engulf. This is a very good signal of a reversal, which is to tell you, instead of this price retracing up, it means it's still pushing bearish. So it is a sign of what? A reversal. So when you see this, you should be looking to expect this type of candlestick patterns at specific points before you go in for a sell or before you enter for a trade. Okay. Here is another clear example for the bullish engulfing candle plus a hammer. Now you see you have the hammer here. This is the body, and then we have the tail here. Now immediately it closes, it opens up with a very long candle that engulfs the previous hammer that was formed. Now this is a bullish candle, which means we are about to push up in a very aggressive mode, and you can see what happened after that. So this is a clear example. Even this one is also a hammer plus the tail here, the body of the hammer and then the tail, and then you have a very big engulfing candle. This is the bullish type. Okay, so the next reversal pattern that I want to show is the tweezer top and the tweezer bottom. So tweezers have equal bottoms or equal tops. Okay, so here these two candles are having equal bottoms. So when you see a candle comes bearish, but as soon as it closes, the next candle did not go down, is the same bottom. Okay, and then started pushing up. This is known as a tweezer bottom. So these are tweezer bottoms. Tweezer bottoms. Okay, which is to tell you The next candle is telling you price is going to start pushing up. And you can see what happened. Price started pushing upwards without coming back to the previous low. So this is a very strong sign of a reversal when you see it occurring at a particular point that you are interested in. Now, one thing with tweezers is that the candles may form without wicks, but even if it forms with wicks and the wicks are the same length, then that is a tweezer what? Bottom. Look at this candle now, this particular one. Let me enlarge it. These are tweezers. So you can see this red candle, it ends here, okay? Then the next green candle also opens at the same length and their wicks are at the same level. So these are tweezer bottoms too, but with wicks. Tweezer bottoms, these two, okay? They are tweezer bottoms. Then these ones are tweezer bottoms without wicks. Here is another example of what tweezers. This time around is a tweezer top. You can see as soon as this one closes, this one open without even going up, and their tops are what? Relatively equal. They are very equal, right? They are relatively equal. And as soon as that happened, you can see that price kept what? Pushing down. Kept pushing down. If you had entered at the close of this candle and your stop loss just a little above the top of the tweezer tops, you could have 1-2 ratio or 2 point. You could have 1-2 ratio 3.45. Okay, so this is a tweezer top. You have another tweezer top just around here again. You can see how many tweezer tops are formed around this level, okay, before the price started pushing down. That's to tell you, look at a tweezer top here. Let me show you. I want to bring them close, okay. So these two candles are tweezer tops. Price could not go above them. These are tweezer tops as well. You see this small one, then followed by this engulfing. They have equal tops, and then this one as well, they have equal what? Tops. What this is simply telling you is that there's a difficulty of price passing there. That's why it seems so perfect. The tops seem so perfect. So there's a difficulty of price pushing upward. So it means price will start pushing what? Downward. That's just what tweezers are telling you about that. Okay. So with this, I have exhausted the 6 strong and powerful reversal candlestick patterns in Forex for beginners. So if you really have any difficulty regarding this, you can let me know in the comment section and I will expatiate for you. Meanwhile, when you check the description of this video, I have a link to my Telegram channel where I can be updating you about new videos, and then as well you can ask questions if you don't understand anything, not necessarily in this video but anything in Forex, and then I can also make a video about anything that you're having difficulty on it. It's a free channel, okay? So it means I'm giving you free mentorship for this time period. So grab it and then go join the group and begin to ask questions and clarify yourself in Forex. If you have any other question, let me know in the comment section. So click on the part 2 of this video to know the points of interest that you will combine together with these candlestick patterns in order to take a trade.